Alrighty, so what's going on, ladies and gentlemen, and welcome to this video where I'm going to be discussing the three types of analysis that are used throughout your Forex journey. So that first form of analysis is technical analysis. Technical analysis is when you use a combination of market tools and or indicators to build an overall bias towards any market. These market tools that you will use during your technical analysis is the Fibonacci tool, trend lines and counter trend lines, support and resistance, and also areas of interest. These areas of interest can include areas of exhaustion or supply or demand. Market indicators, they include the exponential moving average. That is the main indicator I use for my trading plan and that I will use throughout this course. Yes, there are hundreds and hundreds of other indicators, but the exponential moving average is the main one. And I always like to say technical analysis is it's a personalized analysis, and it's basically you drawing on the charts and making your own personalized art. Everyone's technical analysis is different. Everybody sees the market differently. But as long as you are able to sit there and properly use technical analysis with those market tools indicators, you will be able to sit there and develop a solid bias towards any market you encounter. The second type of analysis you'll use throughout your trading journey is fundamental analysis. So basically all fundamental analysis is when you build a market bias that is based on economic, political, and social data. This data includes news headlines and data reports, and they come in forms such as high impact news events like CPI, NFP, jobless claims, unemployment changes, and etc. All this news helps to predict the upcoming performance of a certain currency's economy, and you can find all these headlines on forexfactory.com. So, fundamental analysis, yes, news events happen sporadically all throughout the day. Depending on which pair you use determines on which news you should really be paying attention to. So, say if you are a London session trader and you're trading any pair that includes the GBP, the GBP or the Euro, you'll be looking for news events on forexfactory.com that include the GBP or the Euro. So all news events, all currencies have jobless claims reports. They have CPI news. They have NFP news. They have all different types of news events. But you will mainly see those news events during those traded sessions. I know for your US dollar, for the US session, you will always see some type of high impact news events throughout the week. It's guaranteed always going to be at least one high impact news events on the US dollar. Now, do I trade news? I wouldn't say I trade news. It's not like if I see news dropping at 9 a.m. that I'm like, yo, I got to place a trade at 8:55 because I'm trying to trade the news, you know? I wouldn't say that. Say if I got into the market, we're an overall bullish market and we're at an area of support at 8 a.m. and, we get a nice engulfing at 8 a.m. close. I'm going to take a buy at 8 a.m., but it's not me saying, oh, I'm trading that news. It's me saying I know the overall trend, and I'm going to put a position that flows with that overall trend. Now, if the news flows with that trend, as it should, because news typically does flow overall trend, then A, I'm in the money. If not, it's okay. I have my stop losses set, and it'll be a losing trade at that point, and it is what it is. But that is just all about fundamental analysis. It's just basically you using news, economic data, and just building overall bias using that data. And the final type of analysis that you must use throughout your journey is introspection. Introspection is the observation of your own mental and emotional processes. While you're performing introspection, this ensures that you are clear from any negative emotions and energies. You could make sure you're clear from these energies by performing mindful meditation to clear your mind. This meditation leads to positive reinforcement, and ways to make sure that you stay in this peaceful and mindful positive mindset is by eliminating distractions such as social media, your friends or peers in video games. So, introspection, man, it's going to say it in a future slide, but when it comes to day trading and trading in general, it is 80% psychology. Everything evolves around how you are mentally processing information and how you are mentally handling your emotions. In introspection, this type of self-analysis helps to maintain or control that type of behavior. For one, it says you want to ensure that you're clear from any negative emotions or energies, and that is so true because if you are feeling sad or depressed or angry and you hop on the charts, what do you think you're going to do while you're trading? You're going to trade with those same emotions. You may start revenge trading, and revenge trading is terrible because you take a loss. Oh, I see another opportunity. I'm going to make this back. Take another loss. Oh, but this opportunity is next. I'm going to take this one. Boom. 3 losses. Now you're down, 25% on your account? Like, no. You're going to trade with a clear mindset. That's why meditation is important. When I do meditation, I always start with breathing. Deep breaths. Even if it's a simple three breath meditation. Any meditation is better than no meditation when you're hopping on the charts. So you have that clear focus, You're clearly knowing what you're looking for. You're clearly able to identify what you want out of the market. And you're clearly identifying your market strategy and your market plan. You're implementing that to the highest of ability. Of course, positive reinforcement comes from that. And while you're in this state, like I was saying, distractions, social media, peers, video games, that can all wait. When you're trading, that's your business. That is your work. Everything can wait until you get done that trading session, which should only last about 4 hours, unless if you're swing trading, it can last for a day or so. But if you're intraday trading, it should not take you more than 4 hours. So yeah, that's introspection. It's very important. Do not sleep on this. And finally, just a bit extras that I want to add on to this slide. It says it's important to implement all 3 types of analysis. They all serve a big role in your trading success. 2, perform your own technical analysis. Everyone sees the market differently. And 3, trading is 80% psychology, like I mentioned before. So you have to build a resilient mindset. So all this is just all what it is, These statements state exactly what they mean. You need to use all 3 types of analysis. You cannot be lacking in one because that will serve a purpose or it will hinder you throughout your trading journey or trading session. Like I mentioned also before, technical analysis is personalized. Everyone sees the market differently. You may see an uptrending market, the other person may see a downtrending market, so on and so on. Do your technical analysis and plot what you see because you may be the one that's right. And of course, trading is 80% psychology, so you need to build a resilient mindset and have that long-term type of mindset. There's plenty of traders that come into this game, with a very weak and soft mindset. But I can tell you from personal experience, me sticking through the journey and going throughout the ups and downs of this trading, I was able to sit there and build a resilient mindset because I understand that trading is 80% psychology and 20% of actually what you do, which is technical analysis and fundamental analysis. But that is the conclusion of this PowerPoint on the 3 types of analysis that you will need throughout your trading journey. I hope you guys enjoyed, and peace.